NIO stock heads into the weekend with a sense of uneasy calm. After one of the most volatile weeks in recent memory, the stock closed Friday at $6.75 per share, down 1.17% for the day. In the aftermarket session, NIO clawed back a single cent, a small but symbolic sign that the immediate panic of earlier in the week may finally be settling. But this weekend brings no shortage of questions. The legal shadow cast by Singapore's sovereign wealth fund, GIC, remains heavy, and investors are watching closely to see what comes next. At the same time, NIO's operations continue to move forward, even showing signs of strength in key areas like its battery swap network. The story now is about Contrast, a company facing one of its toughest reputational tests, even as its core technology continues to perform. So, what really matters for NIO heading into the new week? Let's start with the biggest development, the lawsuit. Earlier this week, GIC Private Limited, Singapore's massive sovereign wealth fund, filed a lawsuit in a US court against NIO and several of its senior executives. The claim alleges that NIO inflated its revenue through transactions with a related party company called Waning Battery Asset. According to GIC, NIO improperly recognized revenue by selling batteries to Waning in advance, artificially boosting sales figures on its financial statements. This isn't the first time these allegations have surfaced. Back in 2022, short seller Grizzly Research published a report accusing NIO of manipulating results using the same battery asset company. NIO denied the claims at the time, stating that its accounting methods were compliant and that its financials had been audited without issue. Now, 3 years later, those same accusations are resurfacing, but this time in a courtroom and from one of the world's largest institutional investors. That difference matters. When a sovereign wealth fund the size of GIC takes legal action, the market listens. This isn't a retail class action or a speculative short attack. This is a signal that a major institutional stakeholder believes something isn't right. Whether the case holds up in court is yet to be seen, but the reputational risk alone is significant. The timing also couldn't be worse. Chinese equities, particularly those listed in the United States, are already trading under pressure amid renewed trade tensions and fears of new tariffs. The combination of legal and geopolitical risk has created a perfect storm for stocks like NIO. On Thursday, the initial reaction was brutal. The stock opened nearly 10% lower on heavy volume as investors rushed to sell. But by the end of the session, it had recovered all those losses, finishing slightly higher after a wave of late buying. That rebound showed that while fear was real, there was still underlying belief that the company's fundamentals remained intact. Friday brought a quieter tone. The stock slipped slightly but held its ground, suggesting that the panic phase may have passed, at least for now. The weekend arrives with the market in a cautious, almost reflective state. And that brings us to the other side of the story, the one that isn't about lawsuits or litigation, but about performance and progress. While headlines focused on GIC's lawsuit, NIO quietly hit a major milestone in its core operations. Its battery swap network, one of the company's key technological differentiators, recorded a single-day service record during China's Golden Week holiday. Thousands of battery swaps were completed in a single day, showing just how deeply NIO's infrastructure has penetrated the Chinese market. Battery swapping remains one of the company's biggest bets, a model that separates NIO from almost every other EV maker in the world. Instead of relying on long charging times, NIO allows customers to pull into a station, have their depleted battery automatically replaced with a fully charged one, and drive away in under 5 minutes. It's convenient, efficient, and increasingly popular among NIO drivers. This success highlights a critical distinction. Operationally, NIO continues to deliver. The company has strong product momentum, expanding battery swap coverage, and steady growth in deliveries. But financially and reputationally, it's now under scrutiny. The market is trying to reconcile these two realities: a functioning, growing company, facing serious questions about its transparency and governance. And that tension is what defines NIO's weekend test. Can the company continue to execute operationally while managing a complex legal challenge? Can investors trust that management is being transparent and proactive? Can NIO rebuild the fragile confidence that was shaken this week? In times like these, investor psychology becomes just as important as numbers. Early in the week, fear dominated. By midweek, opportunists and value seekers stepped in. And now, the mood has shifted again, from reaction to reflection. For long-term investors, the next step is all about clarity. NIO doesn't necessarily need to win the case tomorrow, but it does need to communicate. Silence breeds speculation, and in markets, speculation quickly turns to fear. A clear, confident statement from management, outlining their defense, reaffirming the company's compliance, and committing to transparency, could go a long way in restoring trust. The company has been through difficult periods before. NIO's history is one of resilience. It survived a near bankruptcy in 2019, it rebuilt after multiple rounds of dilution, and it found a foothold in China's highly competitive electric vehicle market. This latest challenge is different, not operational, but reputational. Yet the same principles apply. Strong leadership, consistent messaging, and ongoing execution are the keys to recovery. Technically, the stock setup reflects this delicate balance. Support remains firm around $6.60, a level that's held through all of this week's volatility. Resistance sits near $7, where rallies have stalled. If NIO can sustain momentum above $7.25, it could signal the start of a stabilization phase. But if legal headlines intensify, a retest of support is likely. For now, the trading pattern suggests consolidation, a market in wait mode. That's neither bullish nor bearish, but rather uncertain. Investors are watching for signals, not making assumptions. So what would signal improvement? First, an official statement or update from NIO clarifying the lawsuit's details. Second, continued operational strength, more delivery data, infrastructure expansion, or positive coverage from analysts reaffirming their outlook. Third, stabilization in broader Chinese equities, which could lift sentiment across the sector. On the flip side, what could trigger renewed weakness? Additional legal filings or similar claims from other investors. Regulatory involvement, particularly from the SEC or Chinese authorities. Or a breakdown below the 650 technical level, which could reignite short-term selling. Right now, none of those risks are confirmed, but they remain on the radar. That's why this weekend matters. It's not just about price, it's about tone. How NIO, its investors, and the broader market approach the coming week will shape sentiment for the rest of the month. For investors watching from the sidelines, this weekend might be best viewed as a moment of balance. The lawsuit is serious, but it doesn't change the fact that NIO continues to grow its product and infrastructure base. Its third quarter deliveries were up 41% year-over-year, its battery swap system continues to expand, and it maintains a loyal customer base. These are not the hallmarks of a failing business, they are the foundations of a company in transition. But perception often moves faster than performance. In financial markets, trust is everything. Once shaken, it takes time and consistency to rebuild. The market isn't demanding perfection, just honesty and clarity. Looking ahead, investors should keep an eye on three things: the pace of legal developments, the tone of management communication, and any new macro signals from the trade front between the US and China. These factors together will determine whether NIO stabilizes or re-enters a volatility cycle. For now, the most accurate description of the stock might be calm, but cautious. The storm hasn't passed, but the wind has slowed. After a week of chaos, the fact that NIO ended only a few cents lower speaks to resilience, and perhaps a belief that the truth will take time, but it will emerge. Heading into next week, the challenge is not just surviving the headlines, but owning the narrative. The company that controls the story controls sentiment. If NIO can communicate openly, show transparency, and keep delivering operationally, this lawsuit could become a footnote rather than a turning point. The coming days will be critical. The market has shown it's willing to forgive volatility, but it won't forgive silence. Investors want engagement, reassurance, and visibility. This is NIO's opportunity to show that it can rise above speculation and prove, once again, that its long-term vision outweighs short-term noise. NIO enters the weekend with a fragile calm. The lawsuit looms, but its business continues to move forward. For investors, this is not the time for panic, it's a time for patience, awareness, and perspective. The stock's next chapter will depend on how well NIO can navigate the intersection of law, perception, and performance. As of now, the company stands at a crossroads, tested, but not broken. And that is your NIO Weekend Update.